Rob Millner, thank you very much for joining me.
Good morning again.
Rob, your net profit is down 33% for the half. Does this reflect the broader market being smashed by the virus or something else?
Obviously these are the last half figures, and a lot of this was before Christmas, even though we balanced at the end of January, but generally before Christmas. Coal prices have been down from record highs the year before. We're still making very good money out of coal because in Australian dollar terms, with the currency, we're earning well over $100 a tonne for coal. TPG was down obviously with the lower NBN, less margin in the NBN, and obviously the building had slowed down. But we're seeing some sort of a pickup in the building industry actually in the last 3 or 4 months. A lot of the builders are recording record sales. Now,
you don't see lower profits as a key performance indicator. Why is that?
No, with our portfolio of various industries and businesses, we always have what we call unders and overs, non-regulars and regular items. So we've tended to work over the last period of time in cash because we're virtually like an investment company. So we've had a very good year with cash. Our cash was marginally up, and that's one of the reasons why we've been able to pay an increased dividend again.
Well, that's right. Your portfolio is famously diverse. You've got mining, brickworks, telcos, pharmaceuticals. How should investors see your investment position?
Well, we generally do better in these types of markets because our portfolio is pretty defensive. As we all know, every night we go home, we're still going to need energy for our lights and heaters, etc. So the coal prices have been very resilient since this virus has started. And TPG, again, some of the stories coming out of London and Telstra, people need more and more capacity from their working at home through their phones and computers, etc. And as I just mentioned, the brick business is holding up reasonably well at this stage. But we're all in uncharted waters, unfortunately. We don't know where we're going to end up with this.
Well, as you were just saying, your aim is to pay a stable and growing dividend year on year. How do you expect to do that in this current market?
The businesses that we invest in generate very good cash. Most of our shareholders are mums and dads and super funds. So particularly in this environment, being able to pay them an increased dividend, we're very satisfied that we're able to do that. And you go back since the company's been listed in 1903, we've never missed paying a dividend. Even through the depression years, the GFC years, we actually put our dividend up. And there's only 2 of us at this stage that have been able to increase our dividend each half since the GFC.
And how have your investments gone against the market?
Recently, before Christmas, we did very well. But since Christmas, we've held up even better. Soul's, I think, is down about 11%, and the market's down about 26 or 27%. And as I said, we tend to do better in a defensive era like we're in at the moment.
Pharmaceuticals and healthcare are a big part of your portfolio at WH Soul Pattinson. What has trading been like?
Excellent. Unfortunately, in this environment, the warehouses are working 22 hours a day. Some of our sales are up 40 or 50%, and even in Europe, where the cities are in complete lockdown, you still have pharmacies that are open and supermarkets that are open. So the pharmacy business is doing very well. But unfortunately, we have a business called Clearskin, which is a beauty type business, but unfortunately we've had to shut that down in the last couple of days, so that will have some impact on us.
You must be pretty happy with the court decision on TPG and Vodafone. Where to now for that tie-up?
We've been given a tick by the government, and the ACCC failed in their bid to overturn that. But again, this is 3 weeks ago we had that decision. We've been waiting for a decision to go on further with that, but we're still waiting for various authorities to give us a tick to go on and get the thing done, because we want to get moving. And Telstra and Optus, by the day, are expanding their 5G networks, and we've been held back.
Rob, how far do you think the market has still to drop? Do you think now is a good time to get in?
As we were talking before, I'm very, very concerned. There's a lot of hardships on people out there, people losing their jobs, how they're going to pay the rent, how they're going to feed their families. And I think the other thing that a lot of people are missing is the debt that is growing around the world. How are we going to service all this debt? going forward. A lot of countries, a lot of companies were over-geared to start with, and we've got this now facing us in the next period of time. So that does really concern me, the debt and how people are going to cope with all this.
US economist Jim Rickards, he says that this is looking like more of a depression than a recession.
Well,
what are your thoughts on that?
Well, it talks to all these unemployment figures. As we were chatting earlier, underneath this building there were 7 or 8 little businesses. There's only one of them still open today. They would have employed 30 or 40 people, and most of those are casual. Those poor people are out of a job. They're trying to look somewhere else if they can get a job. So I think it's going to have massive ramifications.
Just on property, S&P Global Ratings says it believes the impact of the coronavirus on the property market to be short-lived. You have your investment obviously in Brickworks. How do you see the impact of the coronavirus on the construction industry?
Well, at this stage, neither of them have been affected. The detached housing, which is our main market for Brickworks, is still doing very well. I think we had 2.5 or 2.75 million bricks went out the gate on Monday. Metricom, the biggest builder in Australia, have asked for delivery 7 days a week. So there's still activity out there in the detached housing, and the only activity that I can see in the city at the moment is construction workers when I go for my morning walk. So they're still running at this stage, but we're not as exposed to that part of the business as we're more detached housing.
And finally, where do you see the investment opportunities in this market?
Well, we've always had cash, and again, we're in a very fortunate position to have cash. We need to invest in businesses that generate good cash for us because, as I mentioned before, we pay out dividends and we like to give our shareholders an increased dividend each half. And obviously with those businesses we need to have good management. And we're very open to what businesses we go into, as long as they have good people managing them. And I think we're going to get some bargains before this is finished.
Rob Millner, thank you very much for your time.
Thank you very much.